You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 7th day of March, 2019. So glad you could join us. Thank you very much for being a part of the show. We appreciate you. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're honored to have you in our audience. If you can't see the chart I have up of the S&P 500 Emini Futures, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in 30 seconds, and you'll become a part of our studio audience each and every day. We'll remind you an hour ahead of time. The show starts at noon, so wherever you are, you can get ready. And if you're out of the office, just go to youtube.com/CFRN/live during the live broadcast, and there you have it, our live simulcast, provided by the good folks at YouTube. Thanks, YouTube. All right, now, hear me well. I've already spoken to John. We're going to be brief today. Not because there's nothing to talk about. There's plenty to talk about. But there's also plenty to do. I hope you catch my drift. tomorrow, the next day. We'll have lots of time to wax eloquent about all the important things that have happened so far today, the things we've been talking about for the last 2 weeks. But today is better spent doing what traders think they should be doing, trading. And we can talk tomorrow when the market, or the next day, whenever the market decides to roll sideways on us. I can really sum up everything in just 5 words. Now, some of you folks born before myself might not resonate with this, but some of the younger crowd understand exactly what it means. It's on like Donkey Kong. Never played the game, but I understand the cultural reference. All right, very good. So it is bearish cross. Okay, let's just real quick here. Boop, 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 boop. All right. Sunday night Globex open. Hit the zone. Leg. Retrace to the zone. Doji. Confirm good resistance. A double slice. You don't know how rare it is to get a double slice. I don't even know how rare it is. This is the only one I remember, but I'm sure we've had others. Okay. Now, when you get a slice, what's supposed to happen? Price supposed to pull back up to the zone, confirm good resistance. Well, it consolidated. It couldn't really prove it, so we had to go up to the next zone. Can we prove it here? We proved it. Bearish cross, another pull back to the zone, confirm that good resistance, and then down we go. Bearish cross, consolidation. Now we got one more zone below, down at 27.34/35. Okay. This morning, prior to the open, masterful head fake to the upside, right? But those of us who are part of the CFRN family, the traders, the partners, the passport holders, and even you, the audience, because I gave you these zones yesterday, and we talked about it. I said, if price trades down into this area, 2765-ish, right, and the swing low was 2761.50. I said we should get a bounce, most likely back up to the zone. I said an extreme case would be it goes up to 91.92 and fails, but I think the highest probability is we go up to the zone and fail. I must be a pretty smart guy, right? Pretty doggone clever. Not at all. Not at all. Picture this. You read a newspaper and it says World War III might start tomorrow. That's kind of a bad analogy, but just all right. So at the dinner table, you tell the family, World War III might start tomorrow. And then it does. And then the following night at the dinner table, you look at the family and go, told you so. Oh, well, come on. It's not like you started the war or caused it to happen. You were simply reporting the news that you read. Are you with me? Okay. Now, when I go through my narrative on the chart every day on this radio program, I'm not creating anything. I'm not manufacturing anything. I'm simply reading what I read in the newspaper. And this chart is my newspaper. This is where I come to get my information about the market. I don't go to CNBC. I don't go to Fox Business. I don't go anywhere else other than, now I used to go to all those places and then try to, stuff them into a jar and shake it real good, see what came out. It wasn't nice. I come to the chart, and I hope that all of you partners and passport holders will learn that the market is the best place to get your trading information, because the market makes it pretty obvious what it's trying to do. Now, here price was directionless. Sometimes that happens. The market was waiting on a cue, a signal. Now, this stretches over 2 days. Yeah, basically. And I know that a lot of traders kind of get antsy because they've decided to be a trader, so they should be trading, not sitting here just waiting. I can't even begin to fathom how much money got lost in this soup, this chop suey. We've talked about the whole move, which I can demonstrate here. We've talked about this whole move now for, goodness, weeks, even longer perhaps. What happened? What happened? All right, let me just real quickly show you. Here we go to Michael. Reverse fibs. The 62 right here, which we've blown through. Now, the other fib that I have up from the low to the high puts the 24% fib retracement. Now, we said that the shallowest possible retracement would take us to the BBC. And there we are at the BBC. Okay. What's the next high probability thing? Well, since price is currently below the BBC, when that happens, we anticipate lower prices. This is red and falling. Yesterday I said this is red and getting ready to fall. It has not fallen out of bed yet, but there's a little hook to it. Okay. So with price below the BBC, we may bounce around a bit, but the 24% retracement is in sight, and that's down at 2,700. Current price 27.54 ish, 27.55. Okay, so the S&P still has a way to go to get to that 24. It's still kind of, you know, making up its mind here at the BBC. Now, this morning when we got this bounce, we talked about all the traders that bought into this bounce, bought the market. I mean, that's how the market rallied. There had to be traders, buyers, putting their money at risk. See, for the market to fall, all that has to happen is buyers get out of the way. Yeah, there's sellers too, but for this to happen, it takes financial commitment, right? And I said, I literally feel sorry for these folks because they don't know what's about to happen. As price marched its way up to the WTZ, I said, now since we can't help them, all right, then we have to decide where have they placed their stops. Because wherever they've placed their stops, as price bounces off this BBC to the downside, and we'll just suggest that their stops were right across here. Okay, you got long in here, maybe they get long to here. So some of them may have had a shallower stop, right? But the deepest stop should have been about here. So what happens as price comes back, as we've said that it was the highest probability thing for it to do for some time. So what happens when all these stop losses from all these people that ran this market up get stopped out? And the answer is real simple. And we're not running their stops or anything. It's just how the markets work. There'll be an acceleration to the downside. That looks like a pretty good acceleration to me. Now that was the opening Wall Street candle. 9:30 a.m. Eastern is when it started. And we opened at 27.66 1/4. We hit a high of 27.67.75 in that 30-minute candle. And we hit a low of 27.45. That's a 20-point candle. It's $1,000 per contract. So as these stop losses got taken out, which we were waiting for, bang, acceleration to the downside. Okay, now we're catching a bounce, and right here, what's happening again? Buyers are loading the boat. That's why we're bouncing. Okay, we're at the CFMA1. Could that be sufficient? Could that be our good resistance? Perhaps. Worst case, I say, is we pull up to the BBC. Okay. All right. Any questions on that? Type them into the chat box. Like I said, we won't be here long today. We'll talk about all this stuff in great detail in coming days, probably in coming weeks. So this is how far we are off of the lowest weekly trading zone. with this kind of energy, it's possible we take that out, but yeah, we'll see. So from here, leg down, or a pop up to the VBC, leg down. Now, we put on a big picture alert earlier in the week, a swing trade if you want. It's probably, it could get eaten up in a day like today. It was 27.55, as I recall, to 27.35-ish, which brings us down to the zone. Okay, as price starts to fall, whether it falls from here or from the BBC, a lot of the people who originally had their stop, if it goes all the way to the BBC, people who had their stop here, if price goes all the way to the BBC, they're going to move that stop up. Hopefully they lock in some gains, because when it comes back down, it's going to take them out there. And so you'll see, probably starting about right where it is now, that's when the acceleration to the downside could start. Not in play yet, but just be patient, wait for it. Now, real quick, take a look at the Dow. And see, the Dow is still at the BBC. The Russell has already taken out. Remember yesterday we talked about the Russell leading to the, I talked to you about the Russell leading to the downside. Then John came on the show and said the same thing. Okay, we're already at the 24% Fibonacci retracement on the Russell. Already there. Now, does that create a scenario where it's even more likely that the Dow and the S&P will go there as well? In my narrative, yes. And let's see, NQ. Let's shift now. See, the NQ is almost back to the BBC. All right. So let me shift this out to the daily real quick. Okay. NQ is bouncing at the BBC. Now, we know that the indices, they move differently, but by and large, those of you that have been with me any length of time with Michael and I, you know that at the end of the day, you can look at the S&P, the Dow, the Russell, and the NASDAQ, and their movement over the course of the day are really close. There's no one that leads all the time. That would just make it easy, and there's no easy button in trading. They're simple. Trading is not easy, but it can be simple. You may have heard that. And so we look to the NQ and say, okay, is it giving us some kind of clue? It's struggling at the BBC. The ES on the daily, I wouldn't say that it's struggling. That's just where it is, and we expect that to be good support. Do we not? Until proven otherwise. The bigger picture narrative, though, tells us that the 24 is probably headed our way. I also commented this morning in the channel. There's a lot of comments. You know, I'll copy all the stuff over to the trial discussion channel so everybody can go read it. Now this crude chart, we know that the indices and crude typically move together. If we're having a good day on the S&P, crude will rally, and if it's a down day in the S&P, the crude will decline. Okay. Again, no leader, they just kind of move together for whatever reasons. I don't even need to know the reasons, I just know it's a thing. So this morning I said the crude is trading inverse to the indices. Please understand, this is not really normal, but we know why, because the indices are reacting to bigger picture fundamentals that we've been talking about for weeks upon weeks. And crude just wants to have fun. Let's go to Michael, get a recap of everything that happened in the live training room today, and then we'll talk to John for a couple minutes, and then bang, we're out of here.
And I have a meeting at 1, so after I do my thing,
okay,
I'm just probably going to jump.
And Bert's got a meeting at what time? 4?
2.
2.
2 Eastern. 2 Eastern, yeah.
If Valerie, if you can
Valerie,
drop that link in,
yeah,
we'd appreciate it.
Yeah, somebody's got to type something in, though. And
what are we looking at here? About a 5-minute, 10-minute recap? What do we got?
5-minute, probably.
You don't have to rush or anything. I'm just want to make sure I'm here.
Yeah. No, there wasn't a lot of action. Well, I mean, there was a lot of action, but sadly, it wasn't so much in the room. But I mean, we did well today. So hey,
excellent. All right. Well, let me drag the chart up there. Put it on the big screen.
You go. Make your coffee.
We don't have. Yeah, there we go. Now we got the screen.
Okay. Over this for now.
All right. Okay, it's all yours.
Here we go.
Well, I just been chatting up a storm here with my mute on. Okay, it's all yours.
Okay. All right. I got it. All right. Good afternoon, everyone. Today is Thursday, the 7th day of March, 2019. Let's see. If you have not taken a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you eventually be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. So you must click on the confirmation link. Okay? Okay. Now, today, if you're going to read the spreadsheet, you go to all the CFTC risk disclosures down at the bottom. Today is the 7th day of March, as I told you. And today, we made 4 ticks in the euro, 16 ticks in crude, and we lost 8 ticks in gold. We made 8 ticks on the ES. That put us at plus $205 on the morning session. Okay, today it took 84 minutes and 6 trades to get to the goal for the day. At that point, we're up $105 a contract. And we took a total of 9 trades today. So on the month, we are up $755. That's over 5 days, averaging $151 per day. On the year, we're up $4,853. That's over 42 days, averaging $115 per day. Now, that is 1 contract, 2 hours per day. Okay, 1 contract, 2 hours per day. Okay, let's see. Let's minimize this and we'll go over what did or didn't happen for us. In gold today, again, when you can see the whole morning session in one screenshot like this, there was not a lot of activity. But in gold today, we had 1 trade that stopped us out a little bit more than to the tick, and a little bit more than to the tick. But it ended up going up and doing what it should have done after it stopped us out. And that was all we did with gold. Toward the end of the morning session, we had a short right here. It looks like this was during the break. It had a short right there. But other than that, there's nothing. There is nothing. Okay, on the euro, let's see. Okay, you see we had to scroll a little bit for the euro to see everything that was happening on the euro. So it did have some movement. Our first trade on the euro was right here. We picked up 4 ticks on that. Then it got really choppy. And then we had a break even right here. And that's it. That was it for the euro. During the break, there was 1 long trade from right here. That would have worked out just fine. Okay, and that was the euro. Now, crude oil. See, there were a lot of news events this morning, and there's a lot tomorrow morning, by the way, at 8:30 in the morning, tomorrow morning, 8:30 Eastern. You probably don't want to be anywhere near the markets tomorrow morning at 8:30, okay? Okay. On the crude, there was a long trade right here that we didn't get filled in. There was a long trade right here that we did get filled in, and we picked 14 ticks on that one. And there was another one here we got 2 ticks on. Changed directions. It was momentum short here and here, each of which would have been break even. And then during the break, it had a long trade right here that worked out okay. All right, and it looks like that was it. It's kind of setting up a short right now, but we don't have a strong trend. Keep that in mind. Okay, keep that in mind. Always keep that in mind. On the ES today, we had a few. So let's go look at the ES. Okay, you see how I have to scroll on the ES? That means there was some movement. All right, so this is the pre-market right in here. The ES had some movement in the pre-market because there were huge news events today. Okay, right here was our first one on the ES. We ended up with a break even on that. It was a momentum long trade. Right here was another momentum long trade that we missed. That would have been a break even. Right here was a short trade that I actually moved my stop to break even too quick. And if I didn't, it would have worked out much better. but I messed up on that one. And some of the partners that were in the room this morning did get money on this. They did make money on that, but sadly, I did not. In here, I wasn't doing anything because I really wanted to see a trend develop. So when we got this higher swing right here, we had higher highs and higher lows. I was looking okay for it, and I didn't get filled right here. It turned around, changed directions, and I didn't get filled there. Turned around again, and in this one, I had actually missed the original signal, but I left my order on. I forgot that I left my order on, and when I went and looked at it a few minutes later, I was sitting at plus 10. But I got 8 ticks out of that. I moved my stop to plus 8 ticks. And we had a break even there. Okay, so during the break, now, yeah, we didn't have dynamic resistance above us right here, so you could have gone long right there, and then again there, and there. And then it changed directions on us, and you could have gone short there. Then we needed to put in a lower swing. There was another short right there. There was a momentum short for a couple of ticks. Switched directions again, and there was a long here that probably would have been break even. And it switched directions again, but I wouldn't be doing anything in here. We're in a range right here. On the ES, we're in a range right there. Okay. So I would be careful about trading in that area because it's just going to bounce back and forth and back and forth. Okay. Okay. So with that, I'm going to bring it back over here to the spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 7th day of March 2019. We made 4 ticks in the euro, 16 ticks in crude, and we lost 8 in gold. Made 8 on the ES. Put us at plus 205 this morning. Okay, plus 205. And today, took 84 minutes and 6 trades to get to the goal for the day. At that point, we're up $105 a contract, and we took a total of 9 trades. On the month now, we're up $755. That's over 5 days, averaging $151 per day. On the year, we're at $4,853. That's over 42 days, averaging $115 per day. $115 per day. If you have not taken the free trial with us, go to the home page at CFRN.net. Right over here in the right-hand column, it says apply.cfrn.net. If you click on that, you will be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So click on that confirmation link. Okay? Okay. That's it. With that, I can pass it back out to fabulous Phoenix, Arizona. It's Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Don't know if you're ready, but John's out there in the audience. So, I could open up his mic. It was a big day today. But I'm going to wait until you come back. All right, so other stuff that's happening right now. We're setting up, yeah, I could say we're setting up a short trade here on crude right now. Down close on crude, 65 down to 61. Would be a shorting opportunity there on crude. We have dynamic support printing right here, but it was broken right over here. So it's okay to short into that. Okay, and we're in a range here on the ES. Don't know what's going to happen with that. If you look at it on a higher time frame, we can do that. You see right here, it tried to pull all the way back up to the BBC. Didn't quite make it up there yet. It could still be trying to get up there, but this is a really bearish bar right here. If this bar, what time is it? 32. Well, we still have 13 minutes left, but this is a very bearish bar right here. So far. Okay. And if we're looking at it on a small time frame, it's going to look like we just had a huge run down. See, that right there. And we broke out of that range on the downside. Now, it could just be a head fake, but I have a feeling that if this bar closes down after 15 minutes, that we're going to continue going down. If you look at the 30-minute, And the same thing. It's ugly on the 30-minute.
And as we approach those lows, guys, not only will we take out stop losses, but I believe buyers will like to step aside. Acceleration to the downside.
Yeah, they'll probably get out of the way and let it go all the way down. Down here. That's what I would think. Yeah, on many time frames. Alright, so with that, we can pass it back out. Fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park. And John is out there. I'm going to open up his mic.
Yes, please. Recap of the recap.
Today, it took 84 minutes and 6 trades to get to 105 per contract.
That's a good bingo.
It is. Ding. There's the bell. John's mic is open.
Welcome to the show.
Hi.
Oh, there he is. Okay. All right.
Yeah, today's a day for action. We'll have plenty of time to talk, but we certainly wanted to have you on so that you could give us your take on what has happened today.
Well, you know, yesterday afternoon we got that rally that we were talking about, and it kind of rallied into the close, but it started to come off. So what I did was just said, look, you know, you never know after hours whether it's going to pop or sell. It actually popped a bit, and we just said to sell new lows after hours on everything, and that actually captured this down move quite nicely. I actually think that we're probably going to reverse here, because if it's going to pop, you know, if we're going to pop tomorrow, possibly on the jobs report, we should see a rally this afternoon, and you know, I think if it goes any down any more from here, it's probably going to, you know, I think the situation is going to get worse. And remember what I said yesterday, Thursday being down this Thursday is not a good thing. We're down, you know, a couple 100 points or so on the Dow. If we're down again tomorrow, then you know, you're looking at a sort of a mini 87 type setup, and you always have to be aware of that. Now, we've had numerous situations like this over the past year, you know, decade or two, and particularly this last decade during this rally, where we've gone to the brink, and it looked like Monday was going to be a bloodbath, and they managed to nip it in the bud. Sometimes the Monday was a low, and then market rallied in the afternoon or opened lower, and then it rallied. So, you know, given how strong the market's been before giving up these recent gains, I think you just, you know, you not necessarily get too bearish. You know, the news this morning was a sort of a shocker from this Draghi guy over in Europe. I'm not exactly sure what he did, but didn't go down too well with the market. And but I think it's maybe a short-term thing. You know, we're only down about 45 on the Nasdaq, and it really does look like we could rebound here. In fact, we're making lower lows today on better breadth. So some stocks, including Apple and Micron and a few others, are actually acting quite well today, and maybe helping the market up. Most stocks are well off their lows, so I would look for a possible late rally this afternoon. I know you thought it was going to go down a bit lower to that next weekly zone, and I wouldn't rule that out. But I think it's probably going to bounce off there. You know, look, you've got these Thursday afternoons before jobs number can be surprisingly strong if the sort of word gets out that the jobs are going to be better than expected. One interesting thing today is that the gold stocks have turned quite. They kind of had a lower opening this morning, and they've turned up quite firmly, and they're gaining traction and gaining ground. That actually is potentially anticipating a miss tomorrow on the jobs. Now, that would explain why the market's down today as well. So, you know, I guess if the gold stocks continue to rebound here, and we're look, we're only nine and a half bucks on the JNUG right now. If we were to gap back up through 10 tomorrow for any reason, you know, say you know, for whatever reason the gold stocks react positively to the jobs numbers, then the lows might be in on the metals, and we could see a pretty decent rebound start. The alternative to that is we get some sort of a rally tomorrow that doesn't follow through, and maybe there's one more leg to the downside into next week, where, you know, around the 15th of March or so could be the real bottom if we're not putting in one already. So that'd be a week from tomorrow. So, you know, that would mean another week of sort of these lower ranges in the gold. But I think after that, the gold could go up quite a bit. Also, the grains are picking up a little bit again today, and don't forget we got next week. We've got this government report coming out that could be, you know, could be a big transformation for the grains if it comes in, you know, favorable to higher prices. The platinum, well, the palladium and the platinum are both off today, which is not particularly good for gold normally, but I noticed that, you know, gold is not giving up any ground today, really, to speak of, since yesterday. And this, you know, usually when the stocks are rallying as firmly as they are, as strongly as they are, it usually means the metals are going to follow through probably overnight. So there is a possibility that we could gap higher in the gold or in the metals tomorrow. So keep an eye on this afternoon for a possible buy opportunity in the metals, based on the fact that if the gold stocks continue to improve as they are doing. Lumber, which we commented on. Remember, I actually took a shot at that. Put a buy stop when it was down near the lows a couple of days ago.
Right.
It went limit up yesterday, and it's up again today. Almost the limit, so that, you know, it's very hard to predict this lumber.
And we have building permits tomorrow, I think. Economic news.
Yeah. Just a second.
Once again, on the daily chart, the Dow is at the BBC, and the 24% Feb retracement is.
Just a second.
Go ahead, John. 25,200. The 38, 24,428. Now, see this? You see this? Some of you understand what triangulation is if you're a partner or a passport holder. Some of you have asked me to explain it. Typically, it's when a number of things come together, like a weekly trading zone, the indicators, Concierge Trade Alert, and there's an alert on top of that, a logic alert. It's when a number of things come together. Okay, well, if we do pull all the way back to the 38, which is a shallow retracement, it lines up with these lows right here. Boom, boom, boom. Now again, I'm not making this happen, nor am I making it up. I'm simply reading you the newspaper. Like the dad who read the newspaper and said World War III starts tomorrow in the newspaper, so he tells his family. Now his family thinks he's some kind of genius because he predicted the war. No, he just read the paper. That's all I'm doing. This is my newspaper. This is where I get my market information. We expected this to be resistance. Why? Because it was. And it will be. To when? That's right, until it isn't. The Russell has already hit the 24 and bounced. Remember, the BBC should give a bounce. The 24 should give a bounce. And if we get to the 38, we'll not only get a bounce, but a heck of a bounce. And that might be where we put in a low for the next leg up. Let's see, Mike says that would make an inverse head and shoulders if the ES goes back down to the 38. You know, that's a good point. Now see there's another thing. All right. Now, I don't know how, I don't know that I could assign a high probability to the fact that we're going to make an inverse or reverse head and shoulders. But what I can say is if we do, head, shoulder, shoulder, then it becomes a relatively high probability if the market starts to move up. Well, if we break the neckline, which would be right across here, what could happen? Let me switch out. This is the Russell. But it doesn't matter because the indices, as I said earlier, do what? They travel together. They're right in the same astral plane. Okay. Yeah, this is the continuous chart. By the way, today's official rollover day, but we won't roll until volume exceeds on the new contract. From the high to the low, if we get a right shoulder and if we break this neckline, upside target will become right where this bearish cross took place on the Russell 1708. Could we say the same thing about the Dow? Absolutely. Just grab it and go. Oh, Millie. Okay. So, right shoulder, head. If we come way down here, now see, to make the right shoulder here, we need to drop to about the 50% fib retracement of this move up. Okay. And if we come back and break, we don't have as much room to run on the Dow. NQ. Let's scope it out. Okay. If we were to come way down and create that right shoulder and then come back and break a neckline, upside target 75.20-ish. Thanks for sharing that, Mike B. Here we sit at 38. We had a nice, beautiful drop. We know where buyers' stops are. We just have to see if the BBC, because at first we said the CFMA1 could be good resistance, and it paused there for a 30-minute candle. But buyers are pretty relentless. They're going to push it. They don't even know what a BBC is. They don't know that they're buying into what's potentially a brick wall until proven otherwise. Could we get another head fake like we got this morning? Sure, that's always a possibility. But if when this trend line breaks, just remember that picture I put up. It's on like Donkey Kong. Okay, John, you coming back? We'll talk about this in depth for days to come until we have another great day like this, and hoping tomorrow will be a great day too, because we got a lot of news in the morning. Now, as good Christian folk, I'm sure we all try to help people whenever we can, right? Even people we don't like. Well, here's a truth. Here's a fact. Some people can't be helped. Jeremiah 32:33 says they would not listen or respond. There are people you just can't help, at least not right now. Notice what God said about the Israelites. Though I taught them again and again, they would not listen or respond. Now, if God himself can't help them, what chance do you have? Let's look at the people who usually can't be helped. Number one, people who keep making excuses. Excuses are a crutch for lack of commitment and a smokescreen for self-justification. You can't help someone until they're willing to take responsibility for their life and apply the solutions of Scripture. Think about this. If they won't listen to God, what difference will your opinion make? It'll probably just earn you a label as a jerk, right? Number two, people you can't help. People who move in the wrong circles. I can't remember how many times my mother said, don't hang out with the wrong crowd. Lay down with dogs, you're going to get fleas. Yeah? But we're not supposed to be judgmental, right? No, but we're supposed to be wise. The Bible says, bad company, not the band, corrupts good character. 1 Corinthians 15:33. There are people who simply don't belong in your life, and you can't move forward until you break the link that connects you. The company you keep influences your conduct and your character, and those two things decide your future. There's a popular book out that says the 5 people you spend the most time with, you'll become an amalgamation of those people. Why not 4? Why not 6? Why 5? I don't know. He wrote the book. Let him have it. And number 3, people who can't be helped are people who blame God for their problems. When trouble comes, they ask, why did God allow this to happen to me? The fact is, you'll never see God as your solution until you stop seeing him as your problem. God laid it on the line for his people. Deuteronomy 30:19, I have set before you life and death, blessing and curse. Therefore, choose life. If you want to keep from getting discouraged, love people and pray for them. Spend your time with those who are ready and willing to be helped. That's our good word for the day. Okay, go ahead, John.
Sorry. Yeah, it's actually starting to probe a bit higher already. We're only down 38 now in the NASDAQ, so feels to me like we're gonna, we may recover from this this afternoon. I would probably do the same thing as yesterday, which is, move the stops up, and if it turns back down, maybe breaks that little trend line there, then it could take another leg down. But right now, it's acting quite well.
Well, we'll see what happens when they get up to this 2760 area. Because our bigger picture swing trade had a trigger of 2755, and because important prices and important areas are almost always tested, I don't doubt that price will walk right back up here and test it. So if you didn't catch it on the first time,
yeah, and obviously there's a bit of resistance to go through there with that.
That's right. I'll catch you tomorrow, John.
Okay, thanks.
Thanks so much for tuning in, folks. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell and in the Telegram.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.